The EURUSD is up massively. The Nasdaq 100 is below its 200-day moving average, and so is Bitcoin. What can we focus on this week? Welcome to this week's weekly market update. My name is Alejandro Zambrano. What's going on? What happened last week, and how can we use that information to have an idea of what may happen with financial markets prices this week? First things first, the ISM manufacturing index came in slightly lower than previous month, around 50.3, and that is the manufacturing sector. Remember, that is what Trump would like to invigorate with his tariffs. So far, we haven't really seen any major changes here based on his tariffs. On the other hand, the ADP non-farm employment showed that the US labor market only added 77,000 new jobs from 183 last month. So here we are seeing an impact of the flip-flopping, the on and off of tariffs. And in case of you missed it, Trump did actually expand some exemptions for Canada and Mexico just on Friday, because earlier in the week they had introduced 25% tariffs on Mexico and on Canada, and that obviously creates friction with the neighbors, and they buy and sell huge amounts of goods between them and services. And now this, again, removing some of them. And this is obviously causing frictions and problems because the flip-flopping makes it really hard for people to plan ahead. And realistically, what we have seen so far is that the Canadians and the Mexicans are looking for different ways, new venues to do business. And there's a bit of a boycotting of American goods around the world on the back of these tariffs, as some people see them as unfair. Now, I understand why he wants to do it. He wants to put tariffs because he wants people to set up a shop in the US. So instead of producing, say, cars in Europe or in Mexico, have the same companies set up plants in the US and from there produce and sell the cars. And that, of course, generates more jobs in the US. But it's a bumpy ride, and it can take anything from 2 to 3 years. And that is why we're seeing weakness in the data. And that is why people are talking about recession. And that is why stock markets and Bitcoin are down so much. Now, not all data was bad. You had ISM services PMI, which increased from 52.8 to 53.5, which is higher than the expected, which is good. As well, the unemployment claims, they returned to normal levels. So not last week, but the week prior to that, jobless claims had a quite strong bump and reached 242K. This is on the back of the cuts they're doing in the federal government. And thankfully, the numbers actually came down last week. So it was just a one-off so far. But obviously, more things can happen going forward as they try to reduce the size of the US government. In the case of the non-farm payrolls, the job growth here was 151K, more or less as expected. And this is obviously good because there's a nice contrast here for the ADP numbers. Also, wage growth moderated from previously been increasing at 0.5% month over month, now can come to 0.3%. And this is good for the Fed because if you have wage growth being strong for long periods of time, then that will cause inflation to head up. On top of my head, wage growth is at 4.1% annually, which is obviously great. It just means that people are making more money than what inflation is in the US. And that's obviously amazing because with these real incomes increasing, that increases consumption and that just makes life easier for people. As well, the unemployment rate came in at 4.1%. So people were ahead of the event anticipating that it will come in at 4%. Now, on the other side of the Atlantic, in Germany, they have a new government and they have decided to embark on an infrastructure deal. So you see, up until recently, they had rules within the EU on how much you can spend. And the Germans as well, they were not spending much at all. Despite, by the way, that, say, interest rates were at record low levels before COVID, it baffled me like why you wouldn't borrow money at 0% interest rates and then invest in, say, new railway, new roads, hospitals, and whatever you need, because the interest rate was literally zero. You can pay that off over 100 years, 200 years. You get the idea, right? But now they decided to make changes to that, and they're going ahead with a deal worth roughly 500 billion euros. That's roughly 5% of GDP, and that's massive stimulus Of course, it's not going to be pushed through during 1 year because that will create very strong inflation in Germany. On the other hand, it's going to be spread out, and obviously a benefit is that hopefully the German economy is going to grow on the basis of this, as they need to hire people to create the jobs, and when people have works, they will spend money on other things, and the whole economy grows. By the way, the opposite is happening in the US, right? Firing people, government becoming smaller, and less people working, less money going around. Now, that is obviously key, and that's why the EURUSD soared. It soared massively, because when you have this kind of move, German yields gained, but in the US, because people are worried about the economy, in Germany, in the US as well, because people are worrying about recession, yields in the US remained low and did not follow at all the German yields higher. And that's why the EURUSD is up where it is. We'll talk about in a minute how far and higher we can go. What else? The ECB decided to cut rates. They did that as expected by 25 basis points to 2.5%. Now this is interesting. Okay, so they're using complicated wording, but if you know what we're talking about, then it's actually quite straightforward here. The current rate level is closer to the terminal rate than previously estimated. This pretty much means that they think probably it's time to, the market is getting ahead of itself, and they're approaching the level of interest rates where the growth is good and where inflation is good. In other words, around 2%. So that is what they're telling us. And this means that they're now more data dependent. That means that they're gonna look at data as it comes in to figure out if they should adjust interest rates higher or lower. How did this all play out on the charts? Let's take a look at the charts. So this is your USD. And last week we said that the price was stuck in an ascending triangle pattern. And if we drew a trend line like this, a break to this level would push you to the upside. We reached that target even beyond that, and it went way faster than I thought it would do. And it's good and bad. From a trading perspective, I don't really like it too much because we're now stuck in this huge range again. And you can see how boring trading is when we're stuck in ranges. But let's see how much this has legs. So for now, the short-term trend is bullish above 107.62. And I think we'll probably push a little bit higher. I think this move has caught people off guard, and a lot of people are going to try to hedge and pretty much stuck in shorts, so they probably need to get up. So we're probably going to push a little bit higher. But it's a very tricky situation. The best entry was the one we discussed last week, and which we discussed as well on TradingView, which is the break here. So if you didn't trade that, unfortunately a bit too late, I think. Now there are some options, maybe not this week, but at one point this is going to come down, maybe 106, 105, 90 or something like this. And around these levels, I think people are going to be quite keen on buying and then target the high again. So we at least get some sort of a double top here, and then we'll see how far we can go. In the case of oil, so we've been bearish here for a very long time, pretty much from up here. We've been bearish to the downside, and then we keep on being bearish. Was bearish from these levels here. And if we look at this today, you can see that this red barrier here, so that is the lows from October 29th, November 15th, and then as well December 9th. So that acted as support, but that is now acting as resistance. So when we move up here, people are short selling. And I will continue to be bearish. So the actual level we're watching here is 71.5. But because we're dealing with oil, and because oil tends to be very volatile, it doesn't make sense to work with a very tight stop loss or anything like that close to that level. So that's why I'm focused on 72.26. And I think ultimately people are going to try to sell, reach a double bottom, they will simply go much lower. Why is this happening? Because Russia-Ukraine peace talks going in the right direction, that can boost oil massively in the world. As well, the US said last week they might be happy to lift some sanctions on Russia, which again can lift and get oil prices lower. How about gold prices? So gold prices are trading sideways between 2,832 and 2,955. I think this market is just the market here, which is a bit confused. On one hand, yes, with the uncertainty in the world, this is probably going to go up a bit. So that's bullish. On the other hand, maybe rates are not going to be cut to some extent. That's a bit bearish. Overall, I think this can go higher. But I think from a psychological point of view, we just need a bit of consolidation, because we had a very strong push from here, and at one point it needs to take a bit of a break, because we're approaching that 3,000 $100 mark. And it's a little bit like Bitcoin when it was at 80 and everybody said, oh, it's going to go up to 100. It did go up to 100, but that was not the starting point. That was the end of the move. In terms of the Nasdaq 100, you definitely want to keep an eye on this. So it's both good and bad. So I was a bit surprised to see the market spike as it did on the Non-Farm Payrolls. To some extent, we managed to close above, we did manage to close above 19,896. So I think we can push a little bit higher. Normally, we tend to bounce from these 200-day moving averages. CNN Fear and Greed Index as well suggests we should be bullish, looking for this to trade to the upside. But it's a bit tricky because you see here, the price was stuck here for quite a while in this range. And to be truly bullish, we need to push above here, close above 2,700, 2,800, close above there, and then hit to the upside. In the long run as well, I do think we're going to go up higher. But I was suspecting this to bottom out here last week, and it didn't. Also, which is very concerning, is the fact that they removed the tariffs, about half of them. They removed all the tariffs on Mexico. They also removed about half of the tariffs on Canadian goods, yet we're not seeing any bullish reaction because people don't really trust this government anymore in the US in terms of trading or trade. And from that perspective, people say too much uncertainty, too much back and forward. And we're not seeing any bullish reaction here, which is a bit of an issue. What are the rules of engagement? How will we trade this? When in doubt, stay out. I'm in doubt, so I'm not trading this one. But you can see we're trading lower and lower highs. If one really wanted to, bullish above 19,710 for this to go up. If not, just wait for this high to breach, and then we'll take it from there. In the case of Bitcoin, so Bitcoin, I was bullish from here, and I bought Solana and a ton of stuff. So I got actually quite well rewarded on this move, but then the move fizzled out and was back at the levels here. And this is, again, a bit difficult. We are around the 200 moving average. The CNN Fear and Greed is at very oversold levels, but the problem is that with the indices start looking to bounce, it's a bit of an issue here, and I suspect we're going to break below 770k. So what can one do here? If one wanted to, one could look to potentially be bullish from this range, looking for this to go up, and effectively you're having a very high risk reward ratio because there's a very high likelihood we're going to be stopped out. So potentially buying here, stops here, and then targeting the upside. It is possible. I am long SUI. It's one of these smaller coins. There's similar setups than say Solana and other. Let me show you Solana, where you're dealing with something like this, right? You're dealing with a very aggressive risk reward ratio. So if we just go up to the highs here, you're looking at a risk reward ratio of, I wouldn't call it aggressively high, but it's at, let me actually adjust this. Yeah, you're looking at 5 times risk reward ratio. The reason why it's so high though is just because the probability of us getting stopped out is extremely high. So actually I bought here on Friday 28th, and then this pushed to the upside. But you can see it got rejected here. So you see how this sort of was support and then blocked price. The same thing is happening now in the Nasdaq 100. But yeah, I would probably be bullish rather than bearish here. If this doesn't hold, you're looking at sort of 70k, and this is the low from the election, around 66k. So between these levels will be the next level to look to engage. I realistically think we are going to go up. I don't think we're going to have a recession. I think Trump is extremely sensitive to that. He doesn't want to look like he tanked the economy, even though that's what's going to happen if he doesn't come to an agreement. Remember, in his first term, he had trade wars against China, and those high tariffs are in place. 20% right now, could probably be increased even more. The world has changed a bit, of course, since then. There's not too much direct business between China and the US as it used to be, but back then it was not that great to be long stocks. And if anything, we're starting to see the same here. So what else did we not cover yet? We didn't cover what to watch this week. So you have job openings. Don't necessarily think it's going to move the market too much, but you want to keep an eye on it. The big data point is US consumer price index on Wednesday. So coming in probably at the 2.9%, slightly lower than 3% prior. And this is important because inflation is going in the wrong direction. So if you have less economic growth and then high inflation, then realistically it's gonna force the Fed to keep rates at current levels for longer. Core inflation as well is still too elevated at 3.3%, but might come down to 3.1. Bank of Canada makes probably gonna cut rates, and this would be relevant if you're trading dollar CAD yen. And then on Thursday you have producer price index. It's not really that important right now, but yeah, people keep an eye on that. And then jobless claims as well. With more and more people getting laid off from the US government. We saw actually these numbers jump to about 240, and now they have came down last week as they look to be a one-off. And we really want to see jobless come in at about 220, but realistically it won't. So you want to keep an eye on that. If that number comes in really high, 240, 250, 260, then you will probably see stock market sell-offs. And then we finish the week with the preliminary US University of Michigan consumer sentiment. So Trump is saying that everybody's super happy about the economy, but if you look at the consumer sentiment that was published last month, it wasn't the same reading, it was a different reading. That actually came off quite sharply. So things are not as good necessarily as he says. And the stock market is a proof of that. Crypto markets is a proof of that. Now the ups and downs comes, of course, with change, and that, of course, as well creates opportunities. And that's it. That's our weekly market update. Hope you have a great week ahead. And if you have any questions, just leave them in the chat below, and we'll check in here during the week and see how we can help. Thank you.